Hello, traders. Welcome to another daily analysis for February 8th. We are actually at February 9th already, which is 30 minutes prior to the London Opens. So let's get into what happened today. Today was very quiet, actually, all the way from London session to New York, very limited economic release, and everything was very in a range area only until NY New York afternoon, where we have the RBNZ rate decision. And that decision was expected to be a muted reaction because people were expecting RBNZ to keep their rate unchanged and really wouldn't provide too much insight. And the reason is because that's what RBA did at the beginning of this week. So people always feel that RBNZ were most likely to follow through. However, that was not the result. The decision was quite a surprise. Not a statement itself, the rate was unchanged, but the statement is a little bit dovish. However, a real driver comes down to the press conference, and somehow I trade through it. I watched through it. Honestly, I don't know. Well, the things about market is that you never know how strong the crowd will react to a certain sentiment. So basically, what's driving down a New Zealand dollar right now is because RBNZ had a very strong conviction for their currency to not go over value. So what RBNZ is trying to do is to talk down their currency, and it's very common for central bank to, before they do anything, they will always try to talk up or talk down their currency. And if that doesn't work, then they will really do an easing, or sometimes they will intervene forex market, which is very rare, but they will do it if it's large volatility, things like that. But the rare thing about today is that you have a rate statement come out, that you have RBNZ press conference followed by the rate statement. And you also have the RBNZ Governor Wheeler's interview, which about 2 hours after the press conference. So it's a bit of tricky situation today. What happened is that in these three separate incidents, we all heard a very dovish tone from RBNZ, and that's why basically Newsy has been largely sold off. Of course, I got caught on this trade and I got stopped out, unfortunately. So it was really, beyond my control. I didn't really know will be this much volatility in this incident, in these events. But it is what it is. Sometimes you have to understand, you really, no matter how much conviction you have, trading essentially it's a game of probability, but the outcome it's a statistic. That means the outcome will reflect. We say, oh, you have 70% or 80% win rate, things like that. That will only reflect it after a consecutive of trades. So for each individual trade, it's like a flip a coin. In each individual trade, you still only have 50% of chance. That's why no matter how good your back tasting or anything that you feel, it is essential to limit your risk exposure in every individual trade, no matter how confident you are. The reason is because, statistics speaking, you still only have 50-50, but in the long run, you will have better than 50-50, and that's why you can become a winner in this kind of game. Other than that, equity market today was mixed. Everything again very quiet for this week. The reason is because we don't really have much economic release for this week. Last week was Super Bowl, and basically market is just not paying too much attention right now. We do have a roller coaster ride last week, and that's why this week everything was pretty quiet, drifting to the sideways movement. WTI recovered today regardless of a large build in the crude oil. So crude oil had a large build up today. Normally that will pressure the oil market, but as mentioned, right now we had this diversion with the OPEC and US shale producers. So the crude oil inventory has somehow become a sort of divergent indicator, because back then everything works together, but right now it's just the oil these two pretty much separate each other. And reason, as I mentioned, and OPEC is trying to decrease the supply in order to pump up the price, while the U.S. shale producer is trying to take advantage of this price jump by pumping up more supply. Now, on top of that, you have more complicated thing to come is the import tax by Donald Trump. So that will all jeopardize the correlation between the oil market, and you have to be careful, especially if you trade the Canadian dollar. As mentioned yesterday, look into the micro. In this instance, look at the trade deal itself between Canada and the US. That will be a future direction for Canadian dollar. So really nothing much going on. For Euro, no major news. Continuous negative sentiment from the French election, and the fundamental bias is still looking to the downside. For US dollar, also aren't any major release, but dollar continues to suffer a negative sentiment, and as again the market is expecting a big blow from Donald Trump anytime, but it hasn't happened yet. But mentioned that the court ruling in regards to the travel ban will come out soon, and he is also going to meet the Prime Minister of Japan, Abe, this Friday. So that will be quite a volatile event over the weekend. For British pound, no major release, so it's very little movement for British pound today. If you look at the daily chart, it's virtually unchanged. Right now, it's really, we think it's a neutral currency because you have 50-50. You have half amount of trader wants to sell it, and the other half of the trader wants to buy it. So that's why it really will go with whatever happened to the market right now, to the risk sentiment. For Canadian dollar, it had regained ground today due to the small recovery of the oil market. But right now, the difficult part to trading is because the oil market is an up and down movement. Although the general direction is looking to upside, but you just have to be careful. For New Zealand dollar, again, this was the catalyst today, and as I mentioned, it is being largely sold off. Now, the question we want to ask is, where are we going from here? So, I think RBNZ is very, very clear in their direction right now. Means that any trader who is looking to price in for future hike is not going to do that. So of course that's going to diminish a lot of buying into New Zealand dollar. However, if you look at the fundamental strength itself, it is still an attractive currency to buy, especially versus other weaker currencies such as Euro, such as Japanese yen and Swiss franc. So we do think New Zealand dollar, this kind of selling right now, it's a shorter movement. Once it finds support, it will be a good currency to get in again, but we just have to find out that support first. For Australian dollar, it's actually looking pretty well because of the weakness of New Zealand dollar and US dollar. It has regained ground. There aren't many major news today, but later on in London session, we will have the governor of RBS speaks, and later in Asian session, we also will have the monetary policy. So I wouldn't suggest anybody to get in prior to those risk events. You can trade through those risk events, but right now we really don't know what central bank is going to do. Everything is very vulnerable, and if you follow through the news, you know that a lot of talk is really like we are going to have a currency war, and we might have it, but right now it's very volatile, so watch out for any incidents. For Japanese yen, the headline will be Prime Minister Abe and Trump's meeting. That will be the major news, but that's only coming on Friday, which is tomorrow, so we will see what happened. That might create a lot of volatility, not only for dollar yen, but for the global market. As for now, Japanese yen, again, it's a neutral currency, fundamental bearish, but sentimentally quite neutral depending on what happened to the risk environment. And Swiss franc is the same spot as Japanese yen, but it won't be a much better buy if we have a risk of sentiment. The reason is because the risk of sentiment most likely might created by the meeting between Donald Trump and Prime Minister Abe. In that case, both currency will be jeopardized. So Swiss franc will actually be a much better buy because it's outside this turmoil. Okay, so let's quickly take a look at our 20-year currency pair. Before we do that, let's just go over my trade. So unfortunately, I got stop out for my New Zealand dollar trade, and there's such a huge volatility. I was still hoping, because of this nice kangaroo tail. Of course, it's not a good candle to enter, but I was still thinking things were going upside. Everything was crashed during the statement and the meeting. We actually travel, more than, let's see, almost 200, 180 pips. Let's see, 0.7312 minus 0.7192. 120 pips. The daily range is about 75, so that's about 1.5, off the daily range. It's a quite large movement, and my stop loss was at 71.96, and I was really hoping that this 72.25 will hold on well, because nothing has touched it, especially 72. But that's not the case. We really dropped. So that's the outcome for it. My other trade, Euro Yen, also got a stop out. I entered as a risk event trade because I was trying to. I basically thought the Euro Yen, this large drop over the weekend. I basically thought it was a emotional movement, and when I see this nice kangaroo tail and 4-hour big shadow, I actually got in, hoping to ride it up, but that's not the case. We continue to drop, and I got stop out. So again, looking back, I should have maybe wait for things to cross over to 100-day moving average. People might say, but that's too late. Yes, that's sometimes too late to enter, but you get a much better conviction if you want to do this kind of trade. But again, this kind of trade is a low probability trade because you are trying to basically catch a falling knife. The reward is that your profit target can be much higher, but the risk is that you have a low probability because you're going against the trend. Now back then we did a trade exactly the same Aussie yen right here. Back then it was a huge volatile downside due to, I think, one of the risk events, and I thought this movement was quite emotional, so I was waiting for a rebound to get in, and I got it at at least you have this nice crossover. But for this trade, I didn't get in at 4 hour. I use hourly as well. This one works, the other one doesn't work. Again, it's really because of the probability. It's really looking at things in the micro scale. You understand what kind of trade, nature of the trade that you are entering, and that will really depend on how you're trying to manage it. So I got stop out, 2 trades plus my previous dollar yen. So actually, I gotta be honest, not a very good month to start with. I have 3 consecutive loss, and this is the time that really tests your psychology as a trader, and that's why I'm really happy. Of course, not happy about the result, but happy to share this experience, because when you are on a winning streak, everything, of course, is fine. You gain a lot of confidence. You feel you are very good at trading, but you will only know your true color. Basically, a real successful trader only depend on how he or she come back from a failure. That's my very strong belief, not only in trading but in life itself. I think winner really defined not by how they win, but by how they come back from the failure. And having a loss or a losing streak, I think perhaps it's the biggest psychological challenge for a lot of traders. For me, of course, I'm no difference. Whenever I have a consecutive loss, always, you have a lot of doubt over yourself, you have a lot of doubt over your analysis or over your strategy, even over your backtesting, things like that. Now, those doubts, all I can say is that through time, it will pass. So my best suggestion is not to do anything or not to change anything at the moment, because a lot of people were trying to do one or two things. They will try to either increase their risk capital. It's sort of like they're trying to make the money back, or they try to trade more, sort of like a revenge trade, or they just stop trading altogether, which is fine. Sometimes if you feel like you are not in a psychological area to trade, but not only they stop trading, they just stop doing any work anymore. They just completely forget about market. They don't even want to look at chart. They don't even want to read any news. They just like, you know what, screw it, I don't want to touch it. That's also not a good attitude, because I think what you need to do, and that's the hardest part, is to continue doing your work, continue doing your analysis. But you can choose not to trade, but you definitely don't want to trade more. And I think that's the hardest part, because basically you have to come back to the place that you don't feel comfortable with, and not doing anything, but be there, persistently go through it. I think that will be a challenge for a lot of traders, including myself. I always caught myself trying to maybe increase my capital after consecutive lose, trying to generate more trade that is not there to begin with. And we all been through there as a trader, so just understand it's common to face losses, and it's really how you deal with that will really define the rest of your trading career. Okay, so that's me where I'm at right now, trading wise, psychological wise. Of course, beginning of the month or even beginning of the year, you start with consecutive loss. It's never a good feeling, but you have to be persistent enough to go through whatever you're doing. And the last thing you want to do is to revenge trade or increase too much risk. So hang there, and things will be better. Let's take a look at our 20-year pairs. So right now, let's take a look at Euro first. Euro pound, again, don't have much movement today. Like I said, very small movement. Euro Swiss, you also don't have much movement. Euro dollar, I wouldn't say it's kangaroo tail. It's just maybe it's like a policy movement. So Euro dollar, it does, looking to the downside since we broke down this channel, this trend line. But because the dollar and euro, especially the dollar, is so sensitive nowadays, so it's really hard to get into this trade. And we don't have a signal anyway. We didn't get into this kangaroo tail back then last week because this was the day before non-farm payroll, so anything can jeopardize this trade. So we didn't get into it, but we might find support here and it continue to go up. The thing about it, it's hard to find a meaningful direction, as I mentioned. So I wouldn't really sway too much about it right now to try to generate a trade if it's not there. Euro Aussie, on the other hand, you have this nice kangaroo tail, but looking at the fundamental side, I don't think euro is a strong currency to buy at the moment. Especially we have the RBA governor speaks later on. So again, I don't want to get in a trade prior to the risk events. Euro CAD also don't have much going on. Yes, this is a kangaroo tail, but it's not really in any significant area. It doesn't even have any space, and fundamentally euro and CAD, euro does not have a strong bias over CAD. Euro New Zealand, again, this is what happened today. You got a new huge upside movement, and that's very interesting. See how the market really react very, very strongly to currency pair nowadays. Euro yen, this is the one we were in hourly trend hoping for this kangaroo tail to work out, it didn't work out. So if you took a daily trade, you will not get filled, and that's the good thing about using pending order all the time. So we didn't get filled, didn't have anything happen for euro. Pound Swiss, again, like I said, very small movement today, virtually nothing happening. This is not a trade I will enter because I just don't have enough bias toward either British pound or any other currency for now. So I'm gonna quickly glance through it because I don't have any things to talk about now. A lot of people would look at, you see, this is the thing when you trade technical, you will always emphasize on the trade that works out. You say, hey, you see the kangaroo tail work out. But the thing is, you have a lot of trade that maybe doesn't work out. So you have to look at the bigger context of why does a trade work out. This trade works out because of the RBNZ. But if you have entered at this kangaroo tail, that was before the RBNZ events. And the RBNZ events was also looking to the downside for Pound Newsy. So I guess that's the thing, that you can trade with technical only, and that will be fine. But you have to go through a much larger drawdown because of the conflict between technical analysis and technical signal and the fundamental. And if you completely ignore the fundamental, and I think that's fine. It really depends on what you like to do. I used to trade with pure technical, and those are fine, works fine for me. But I just get into more in the fundamental side, and I think the best benefit is really to avoid a lot of losers. But of course, sometimes you also miss winners. So it is what it is. You have to really pick and choose whatever approach that you are comfortable with. So Pound Newsy, it's what happened. And Pound Yen, this pair again doesn't work out today. Nothing really happening. So we'll just keep going. Swiss franc, Japanese yen, again, this kangaroo tail doesn't work out, and it's not a pair we particularly have any strong bias for the upside or downside. Dollar Swiss, dollar CAD, and dollar yen. So really not much going on here. We will keep going. Aussie Swiss, okay, not much going on for today. Aussie dollar, Aussie CAD, Aussie Newsy. Aussie Newsy was very interesting. You got a huge upside movement from Australian dollar and a huge downside movement. This was pretty much because the RBA, I think. And there's a lot of pricing for people to expect a better RBNZ statement. We did not have that today, and it shoots up. And now we actually, it looks like have to see what happened tomorrow. But if we close above this 200-day moving average, daily moving average, this will be quite significant for Aussie to regain strength. Aussie yen, again, not much going on here. CAD Swiss, CAD yen. CAD yen, this is not a kangaroo tail, I think. It's more like a doji. Let me quickly see. 85.41 minus 84.7, 3 minus 85. 85.23 will be the opening and close. Yeah, so it's not really a signal here. It is at a good level though. We are at a good support area, but we'll see what happened to give us a reversal signal. If we have a reversal signal, CAD yen will not be bad. It will be quite good to buy. UT Swiss will continue drop for all the UT pair. It's just it's the same thing. It really keep dropping New Zealand yen as well. So that's pretty much what happened right now. And That's it, guys. I don't have anything for daily wise. Risk events wise, we do have RBA governor speaks later on. Might be tradable, might not be tradable. We don't know. We just have to follow through. And let's see what else we have. We have unemployment claim at New York time. Not really a tradable event, but what it's good for you to take a look. And Bank of England Governor Carney was speaks. And finally, we have 7:30 Australian dollars RBA monetary policy statement and Chinese trade balance also coming out. So not really a tradable events, to be honest with you, because this kind of events, it's harder to trade. You have to really make a more objective direction. So that's it for now. I hope you find it's helpful. Now for me, I will keep trading through it. Again, not a good month so far or year for me with 3 consecutive loss, but I hope to keep going through it, and again learn from my mistake. I hope if you've been through a losing streak, you know exactly how that feels, and then just hang there and remember, don't revenge trade or increase capital, things like that. Okay, guys, hope this video is helpful. If you have any question, please let me know. Otherwise, I'll be back tomorrow with another daily analysis. Thanks for watching. Bye bye.